something. So I think that's kind of spooked people a little bit. But
All right.
let's see. It's also tiring.
So I think we're streaming, blah, blah, blah. Let me see if it's going through. Okay, Twitter is on. YouTube should be on. LinkedIn is taking its time. It is on as well. Okay, awesome. Cool. Guys, what a time to do the episode. Just first, maybe a quick, I guess, emotional check. How are we all feeling? Like, I mean, I guess you guys know my portfolio, so maybe a bit less affected, but serious. How are you guys feeling? Tom?
Yeah, I think, look, this is not my first or our first rodeo, right? I do still think that the extent of what happened on Friday has been at least unmatched to anything that I have seen in crypto. I think that a lot of things, so this sort of cascade that got triggered on Friday is nothing I've ever seen. I thought it was very crazy, and I personally believe that something went very wrong. I don't want to sit here and speculate, but it's very likely that probably one of the big exchanges that there's some chatter about collateral depegs, and so what probably happened was some sort of liquidation cascade that was driven by something that should not have happened in the first place. And I'll just leave it there. A lot of carnage, right? That obviously saw a lot of people unfazed, and it also did see a lot of people no longer participating in this market. I think there's $20 billion. This is at least the last number that I saw floating around of liquidations, which is quite a lot. I think FTX was $1.5 billion. And I think that sort of puts it in perspective in many, many different ways, right? So there's one, structurally, is this something that should concern us? I think not. So geopolitics is nothing that any of us can influence in the first place, right? We can just try and keep our portfolios robust in a sense, and we can try and put them in a context of a long-run participation in whatever sort of economic gains we may or may not see. And ultimately, I'm still pretty bullish on crypto. I'm still pretty bullish on Bitcoin specifically. I think it's still it's kind of bad, but historically speaking, it's October, which I don't even know if they've kind of, so seasonality is there. There's October. November typically even outperforms October. I'm even afraid to say this because I don't know what can possibly like follow Friday. And then December typically is also pretty good, and and I believe that we're still up for some pretty significant gains in the space. It's hard to believe now, and maybe in 2-3 weeks time or months, I'll look back and I'll be like, what have you done? Like, what's like this? So this might age very poorly, but I'm pretty sure that we're still good and still bullish. Policies are good. We've got out ETFs being announced, pretty soon, and then we'll take it from there. That's all I can say. So sorry for everybody that lost their life savings on Friday. I think that the market still isn't really regulated enough. People are going to be calling for regulation now, and I think probably on that front, that's not a bad thing. But ultimately, I think we're still in for a good run, and I'll leave it there.
I'll jump in because I want to corroborate what you're saying, but of course I know I'm like a perpetual crypto bull, but I think what's really interesting with the move is it was more of like a trigger and a reaction to this big macro or geopolitical news, but it wasn't something that changed massively with regards to risk assets long term, or even the crypto narrative as it stood for the past 12 months, or even expectation with regards to rate cuts, which I still think are like the bigger factor in driving risk assets anyway. And so again, just as you were saying at the beginning, there's probably something funky that happened in a very bad way, where you have this announcement, and sure, it pushes prices down, and sure, it triggers liquidation, and then it's a game of liquidation and structural instability that then gets corrected relatively quickly to get us back to the prices that are still very okay. And so I met with Sotiris this weekend, and I was kind of saying, it's funny because for me, when I woke up, I have this instinct of, just checking the portfolio. And I didn't realize that anything really terrible had happened just looking at my portfolio, which is a spot only, zero leverage, type of thing, and mostly Bitcoin and Ethereum. And it was totally down from the previous day, but it didn't feel like something cataclysmic had happened, right? And it's only when I saw all the Telegram groups and the messages and the headlines that I'm like, oh shit, damn, something, massive took place. But I think it was really this game of leverage that took place. But otherwise, in terms of narrative, Xi Jinping, Trump, a war, a spat, maybe some leverage for negotiation, starting aggressive and then pulling back to something that is more measured and more rational. But I don't see any reason to sell, my Bitcoins to the bankers and the asset managers just yet. And so happy to hold. And again, I mean, we're thinking about the seasonality, which is only just one factor, one reference point in an overarching strategy, but it's still there, right? And so I don't know. I feel like my long-term thesis hasn't changed, but maybe it's because I wasn't rocked the way some people were. And so I'd love, Sotiris, for you to tell us, your feedback. And also I'd love to discuss later on, who do you think were the big winners of this move? Because I feel like 20 billion in liquidation means someone somewhere, like several players, made that money that was lost. And I can't really compute where it is. And also, I don't know which funds got hurt the most. That's another thing I want to talk about, which is, my firm is in touch with a lot of funds. And so we're doing check-ins over the weekend. So far, there's no horror story. Like, everybody's kind of okay. Some people saying, oh, we lost a few percent here and there, but then we got some stink bids that were filled. So we're actually, up on those positions, or the people were like, we were fully hedged, or we actually made some profit off of the volatility. So like really interesting stories, but nothing where someone messaged me, in horror saying, this fund, they got wiped out. Like, I haven't heard that. So big ramble, big rant. Sotiris, to you, like, how do you feel about the thing, even on a personal basis and in terms of trading and what the future holds?
I wasn't too badly affected. I'd already risked off quite a lot of my crypto holdings. I had one leverage position on. They actually put on after our last call. It's a Doge long that just got wiped out. But apart from that, it wasn't too bad in the grand scheme of things. But I did end up risking off after the bounce completely, just because I think PTSD more than anything from the last round of tariff FUD, and I think that was also probably why the sell-off cascade got triggered initially, just because everyone was so sort of traumatized from 6 months ago that they were just like, any kind of tariff war negotiation again between US and China could be protracted, especially given the nature of China sort of wanting to save face. And it seems like Trump over the weekend was trying to sort of backpedal a lot of the aggressive talk. I think we just saw today an announcement out of China saying they'll fight the tariff war to the end, which I think is like spooked the markets again a little bit. But yeah, I don't know. I feel such an aggressive move and liquidation cascade is just fueling my feeling that the end is nigh for crypto. I'm positioned long again, but my gut feeling is just we're in the last innings, if not already topped. Again, I hope I'm wrong, especially for my bags, but just such an aggressive move that seems so random, I think has been, it just gives me similar feelings to back in 2021, where we just saw this like very sudden sharp sell-off and then a lot of people are complacent, and we just saw it kind of gradually roll over and then go lower and lower. I'd say the difference now is back then there was a lot of like retail froth and FOMO, and so I think most people weren't expecting the top to be in, whereas this time most of crypto Twitter is like the top is probably in, and so potentially the masses have you often want to do the opposite of what's consensus. And so yeah, I don't know, it would seem like an obvious top if it is the top, so it's probably not, but at the same time, I don't know, equities feel a bit frothy in the short term. I'm not sure who's left to buy crypto at this point. Yeah, I'm just feeling bearish.
I want to leave you the floor, but I just want to interject and kind of present this argument, which I think we talked already, the two of us, which is I find it, on the other hand, extremely bullish that we've had such a massive reset in leverage and such a massive liquidation event, and Bitcoin is still holding at 115, or something. And the weird thing is, while I'm saying that, I agree that it was a massive move, and so there's probably some ripple effects that we are yet to feel. So we're not done yet, I think, in terms of either volatility or swings or some kind of bearishness. But again, I was talking to my friends, and like even like non-crypto people were like, "Oh yeah, but it's I heard there was like a massive crash. Where's Bitcoin at?" And I was like, "Actually, it's trading at 115." I'm like, the solidity, the strength of the market is just mesmerizing. Like for me, I'm just like, I keep looking at it, waiting for something to happen, and just not happening. And so I feel like people, they were dip buyers, like to some extent, right? And so I don't know, how would you explain that, or how would you counter that, basically?
Bitcoin is potentially the exception. More
right.
Money now behind Bitcoin, so I think the sort of like weaker handedness of retail, I think, is going to be less prevalent with Bitcoin now. So I think a downside move is just going to take potentially longer to see. Maybe some of the Bitcoin stuff is somewhat telling, where I think most of them now, except maybe Strategy, are trading below MNAV. And so I think that's also kind of telling about risk appetite for crypto from institutional players, because it would seem like a sort of easy opportunity there to scoop up some discounted Bitcoin. And yeah, I don't know. It just feels like crypto is weirdly underperforming. Like gold has just been on a massive run. Equities just grinding higher continuously. Most commodities as well, just also pushing up. And then you've got crypto, where Bitcoin, I don't know, it's moving up slowly, but it's not making any massive leaps. The altcoin market is just completely oversaturated, endless extraction.
Agreed.
I don't know. I'm just really struggling to see where the next narrative, where the funds are coming from to continue this crypto run. And I don't know, after our last call as well, I was thinking, like, we're looking at the sort of the Google search trends and things, and like Bitcoin's very low, yet the price is still very high. I'm like, is that kind of good or a bad thing? It's like either we're still early and retail's not caught up, or retail's now not interested anymore and the price is high, and if there's no more interest, then the price is probably going to come down. So yeah, I don't know. I hate that I'm bearish, but right now I'm pretty bearish.
But I think, yeah, I'll interject here as well a little bit. And obviously, and I think I can't emphasize this enough, I think what happened on Friday was unseen, unheard of. And I think I really want to, start speculating on this a little bit. Just because, just to sort of point out as to how much of a, not even a black swan, but I think an event of incompetence this has been. And I hear and see a lot of things that point towards Binance, just sort of putting this out there. I didn't want to, but ultimately I think that a lot of their trading had been fueled by a lot of their collateral. So there's, Binance Sol, a lot of sort of other collateral that's underwritten by Binance, which depegged, and that ultimately started a lot of these positions, which now had a lot less collateral than they otherwise would have, because it's no longer pegged. Started liquidations that otherwise would not necessarily have been there. So let's say you have $100,000 coin margin position on with Binance backed Sol, right? And let's assume your Solana is also your Solana position or backing assets are also at 100,000. Let's say it's a 2x leverage, right? And you'll get liquidated at a 50% loss, which means like 100% loss, right? And now if suddenly your collateral, which shouldn't depeg, depegs, then ultimately what happens is at this point you're being margin called, and what that means is that the coins that you now used as collateral are going to be sold, right? Now, and we're just talking about one position. Let's say then at this point, Solana will be sold on the open market, and it will not be sold as with through means of limit order, but it will be sold. These are auto leveraging sequences that are being triggered. It will be sold at market, as in just take these tokens off me, whatever it takes, right? And so I'm just talking about one position. Let's, if we sort of, there's 3 of us here, and let's take 3 million of us here, and then you can kind of imagine of what would have happened to sort of do that. And I think what happened on Friday should not have happened, but it did. And ultimately, if we look at all of these historically, right, all of these big liquidation events, they have been good buying opportunities, and I'll stand by that. And I understand that emotionally this is not a very, very good time, but at the same time, Larry Fink said something yesterday that he thinks was, so he said, one, Bitcoin is a good asset. It's almost like digital gold. Just don't buy enough of it. Fair. But the more interesting thing is actually, so BlackRock had gotten a lot of exposure to their products through IBIT, so through the Bitcoin ETFs. So for them, this is a huge distribution channel, right? And that means that there is a lot of buyers. If we are going to look at especially the announcements. So the Google search interest over the last couple of days, we'll see that that's actually been on the up, and that's something that generally, I don't know, makes me a lot more bullish. And I think that this is, and again, this could be completely wrong, but I'm still looking at fundamentals. This doesn't quite strike me as the top, simply because we haven't had the gains that you would typically have. You don't have the exponential gains, and I did not confirm the sort of exponential phase just yet. But maybe we can also start reviewing some indicators to just check in. Where's the Pi cycle top at?
Well, it hasn't crossed last time I checked, but I can share my screen and show some stuff. But I think one interesting comparison that one chart that people keep on showing, which I think is so misread and kind of goes against what you, Thomas, and me are saying, which is, the classical chart where they show the performance of each cycle. And then you have the first cycle that's like massive and going up. And then the second cycle that goes a bit less up. And then the third cycle. And then they show like the current cycle, and they're like, look, guys, there's so much more to go, basically. We have to go so much higher. And I think people don't even realize this kind of decrease in returns you're getting cycle after cycle, which I think makes sense as the asset becomes more liquid and things get more less volatile and so on. But still, I feel like based on that chart, you could potentially see this being a top or close to a top. That being said, I still, again, because of the macroeconomic thing and the products that are available and the participants that are involved, I still think we have a way to go. but you could make a point that we're never going to see the same returns we did when it was a 2015 or 2017, pump, or the 2020, 2021 pump, and so on. So yeah.
No, I think that's fair. But yeah, still, I think the exponentialness of things, and you could argue obviously the bottom was at 15K, so we're already quite there to play devil's advocate. But I specifically still think that on the altcoin side, and I actually do think that there is a lot of exposure to be had, because that's where I think the majority of the innovation is going to happen, because it's not like, people are going to be using Bitcoin to, transact. If anybody's ever used Bitcoin and look, I love Bitcoin as an asset. I don't love it to sort of transact with, because it is absolutely, it's not great. It's a terrible user experience. And it's very, very technical. And I think from that perspective, the innovation is going to happen around Ethereum. The innovation is going to happen on an account-based system, and there's still more participation to be had.
I'm not showing the screen to interrupt you, just to show the pi cycle we're talking about. It doesn't feel like we're even remotely close to crossing. So if we go by that indicator, but it's been going on for a long while, right? When you see the 2018 and then the 2021, they were much closer than 2021 is to entering into 2026 if we don't cross it in the next 3 months. So yeah, there's that. Thomas, I'm curious from your perspective and with your background, like, who do you think are the big winners of this weekend? There's like a bunch of losers, and I guess there must be a winner that takes the other side of the trade, I guess. No?
Yeah, that's an interesting one. So there have been some, well, it's not even rumors on Hyperliquid. There were certainly a couple of traders that did put on really, really big positions, but I think we're only talking about hundreds of millions of dollars. I think the big winners of the weekend would have been exchanges, that, or whoever would have triggered these deleveraging sequences. I think Binance was a massive winner. They did compensate users with, I think, like $200 or $300 million, which is nothing. Which is almost like, oh, you've lost a leg. Here's a Matchbox car you can play with. I think that's probably being too generous of a comparison. I think exchanges. I think that they made an absolute killing, if you think about it. Because ultimately, at that point, you're the market making expert, but at this point, spreads widen, which means that market makers will not be bidding as aggressively. And if they didn't even stop bidding at all, obviously they've got some sort of parameters. They need uptime, but if ever they do feel any of these bids, they need to be extremely, extremely cautious, right? And that's how they're essentially handling this at that point. And somebody would have needed to be on the other side, and I assume it's Binance as well, because not all market makers would have bought it. Again, I just want to drop one remark as well, and no big players have been faulted or have been at least found to be illiquid or bankrupt. I think it's too early to sort of say that, and personally, I'd be surprised if this didn't affect a couple of market makers or funds. It's impossible, I think, that it wouldn't. But unfortunately, these things take sort of time to pan out. And I'm sure there's a lot of legal stuff going on with exchanges now for compensation, and that's. Yeah, a lot of people are already dead. It's just they don't know it yet, or they're still hoping for some sort of legal recourse, which, good luck. This is crypto.
Yeah. I mean, agreed 100% with everything you said. So I do think the exchanges typically in like those big volatile moves tend to be the winners. And, having worked at an exchange about like 6 years ago, I do remember that when you have volatility, the margin traders getting killed are just very profitable. Well, things like, it's almost unfortunate, but it is, you are selling at market and you're getting more money than what the other participants are getting. I also suspect that some of the internal market makers of those exchanges probably made some good money with priority information, priority execution, preferential treatments on capital. And so if you're a smaller market maker that's not deemed as important as the internal market maker of not to name names, but let's say a Bybit or an OKX or BitMEX or whatever it is, you probably got killed at some point. And so, yeah, I mean, the thing that I'm really perplexed is, again, like I've asked a lot of people if there were any horror stories, and I just haven't heard anything yet. And so it might be a question of people not wanting to admit it, or people looking for recourse and waiting to get a final result. But you can't have an event like that without someone suffering. And then also something that I think a lot of people don't realize is when it comes to market making, it really is a game of speed, right? Where the typical analogy is almost like a F1 race where, you all are very efficient, very fast, much faster than any other regular car. And then it's just a question about who can get milliseconds ahead of the others. And so in volatile moments, you have all the fastest and best players that essentially disappear out of the order book and leave the other market makers kind of hanging high and dry. Again, explaining why I think some market makers, must have been killed during the weekend move. And on that note, I think an interesting comment to make is it's also really interesting to kind of look at the effects that market makers have on price. And by that, I mean the absence of market makers can have on price, because I think what we saw is there was volatility. And so all the sophisticated market makers essentially, I would presume, I wasn't there to see it, but disappeared out of the book because they couldn't handle that type of volatility and that type of risk. They didn't want to be the ones holding the bag. And so as a market maker, you have a certain service level agreement that commits you to a certain uptime, but you always leave a few percentage out of 100%. You say, I'm going to be up in the order book 97% of the time. And then you have 3% where you have discretion to not be in the book. And I think it's for those volatile moments where everybody disappears. And so you then see where's the real bid? Where are the real buyers of an asset like Atom, like Cosmos, or the real buyers of an asset like Chainlink and so on, or whatever coin it is, right? And so I think that disappearance of liquidity in the order book just shows there's not a lot of solidity in it until people are like, oh my God, it's so discounted, I'm happy to go back into it. And then, of course, you kick everything back in and then you ride all the way to the top, right? So, yeah. And so, go ahead, Sajiris.
Because it all happened in like 20 minutes. And so, unless you were online at the time, like no one was really setting stink bids at like 1 cent per atom or whatever.
But I'm pretty sure as well you would not have been able to participate. So I've heard a lot of all of these bids, all the limit orders that you would have set at this point, they would have been completely ignored, right? Because I think there's a sort of sequence that they would have put in, or at least not in all exchanges, but I've heard a lot of negative things of a couple of limit orders that had not been filled. And that's something that, again, especially if you think about it, right? So this is such a probably 10, 15 sigma event. So that's it doesn't even exist. It occurs every like decades, a frequency of decades, a couple of decades maybe. As we sort of move this forward, I'm sure there's going to be some significant changes made, especially on these pegged assets, but ultimately, yes. So there's no participation at that point in the market, like you said. There's no natural bids, but I'm pretty sure as well that the order engine will sort of switch gears at that point, and it will obviously give preference to these deleveraging sequence trades, which is just selling, right? And ultimately what then happens, it's almost like spoofing, right? So you've got a lot of sell orders that will get priority, market sell orders, and we've seen what happened, right? And I think that they'll have to learn from it. And yeah, I think what was quite interesting though,
also auto deleveraging becomes the buyer as well.
The seller.
It's like the auto deleveraging though is affecting the profitable shorters. Right. So it's like deleveraging their profitable short positions to turn them into a buyer who's actually like bidding back up the cascade. But obviously, if everyone's net long, then you've got far fewer profitable shorters trying to stem the bleeding. But I think that also caught people off guard, where they're like, "What the fuck is auto deleveraging?" And I think people were kind of a little bit surprised. I had a bit of exposure to it previously with Hyperliquid when they had like the jelly like attack and stuff, and so that's when then Hyperliquid kind of introduced it. But apparently, it's like a fairly common mechanism within like centralized exchanges as well. It's just a lot of the back workings that people don't often talk about. But I think as well, though, just like mechanically, this seems sort of hyper magnified in its sort of extent, because even in like COVID, you weren't seeing sort of altcoins down 60-70% within an hour. So on a percentage basis as well, in the short term, it seemed very extreme. But then at the same time, I don't know, it's like you can have a mechanical instance that created such a negative effect, but then what's like the underlying, is there like some other underlying reason? Is it just like a random blip and then back to up only, or are we starting to see the first cracks of
No, I think
people
on this one,
people are
I'll
just
jump in.
ultimately risking off?
So I think, and so especially if we just look at the Binance back collateral, right? If you look at these positions, and again, this has to start somewhere, right? And it will start with very few, and that has a secondary effect, which is as they're deleveraging, it will push the price even further, which is going to increase participation in this, being on the wrong side of the trade, right? But this is not normal. If you look at any sort of trading volumes on that side, you can see that there would have been something wrong with probably the trading engine, with prioritization, and so I think this is not cracks just yet. This is one exchange that would have driven, and maybe it's all of these, sort of exchange pegged assets, which is anyway still an interesting thing. Why would you have Binance Sol instead of Solana directly? That's sort of an interesting one. I mean, obviously, I get it. They, run their own nodes. I get it from an exchange perspective, but as a user, why would you expose yourself to that secondary risk whilst you're already exposed to a really volatile asset, right? That doesn't really make sense.
Isn't there, and I'm just actually asking the question, isn't there a way for them to stake Solana but then get Binance or OKX Solana that can then be used as capital? So I guess it's just more for the efficiency. Yeah.
Yeah. So,
I'm not saying it's smart, but I think that's the reason why people do it, right? So
it's what we call in finance rehypothecation, right? And it's highly illegal in most areas. It's also what essentially brought down markets in 2007, which is essentially, well, I owe Sotiris and I say, hey, Justin, and Sotiris, and essentially I say, hey, do you want to? Sotiris says to Justin, hey, I've got this loan that with this other person. Do you want it? I'll sell it to you for 70 cents on the dollar. And then essentially, so there's one asset that a lot of people get exposure to, which sort of removes the real underlying value that's sort of backing it, right?
It's adding leverage to the system. It's the same with like people looping in.
Yeah.
It's just building up the sort of less obvious leverage. Then I guess you see a flat.
Guys, a question I'm really curious about is if we can go a bit on the degen allocation side of things. I do think it was an opportunity to scoop up some cheap coins. I don't know if people had the courage, while it was happening, to do it. I wasn't even awake necessarily, but then when I woke up, I still felt like a lot of altcoins were definitely more down than, let's say, the Bitcoin holdings. And so I naively felt like it was an opportunity. So I made some purchases. I'm happy to talk about it, but I'm also curious, were you guys buying, in the past 48 hours? And if so, what were you buying and what was the thought process?
Yeah, so for me, Ethereum. just really boring Ethereum, because it felt like the safest bet, well, in a really, really unsafe space. There was that, as well as Robinhood. So I still like, again, like sort of equity exposure with a bit of a crypto twist. So that I'm a big fan of, and on the smaller side, Hyperliquid and Pump, because Hype is still around. Which, I mean, this is, to be honest, like, I can't stress this enough. It's still around. Their stablecoin actually went to 1.12 cents. So I think what's not to like? But I'll pass it on. So I'll leave it then. Obviously, this could be completely wrong. This is not a solicitation or anything. It's just an observation-based trade.
For me, I've completely mid-curved the last 2 weeks. So basically just do the opposite of what I'm currently doing. So for me, when I woke up, I saw the huge wick down, the bounce. I personally risked off as it bounced and caught a not too bad exit point. I then wanted to sit on my hands until there's a bit more clarity around Trump and China. I then went back into crypto, I think Sunday night, when Trump tweeted out basically nothing to worry about with China. Again, probably mid-curving it, thinking last time with the tariff stuff, when Trump was tweeting things out, it was relatively directional to what ended up happening. In the most obvious example, when he said buy the dip, like now's a good time to buy the dip, that pretty much marked the bottom. And so I was also like, I shouldn't probably fade his tweets again this time, as a ultimate mid-curver would do. So I got back in at lower entries than when I sold. So I was also kind of happy about that. It wasn't like hugely lower, but it was still a little bit lower. As of this afternoon, I'm now lower than I was originally. So I think it was ultimately a bad decision. But yeah, I just went back in on Hype, Pump. I think XPL is a good bid, but it's just cost me so much money the last 2 weeks. Buy a bit more of that. I got back on Asta, and I bought a bit of Doge, and that was about it. But I'm not trying to have like too many positions on at the minute, and that already seems like a lot. But yeah, I don't know. I want some agility as well at the minute. So I already feel like I've got too many positions on. So I'll probably try and consolidate a bit further. But I also want to make back a 20% drawdown from the last 2 weeks. So I need to be like moderately risk on, but I also just feel that's the absolute mid-curve approach to all of this, and I'd probably be better just sitting on my hands until the dust settles a little bit more. But what a fucking depressing chart. I caught it at 76 cents at the bottom, rode it up. I was like, nice trade. Exited, and then since then been failing at buying the bottom. I thought 65 cents would have been a great entry on this, and then on XPL at least. And it turned out it wasn't. Asta as well. I just think it's like Binance season, and so if we do continue this move up, I think BNB is gonna continue going strong, and I think Asta is sort of well positioned as the sort of hyperliquid of BNB. CZ is also very limited on what he can say and promote with regards to Binance, but he seems like he's openly allowed to talk about BNB and BNB projects. And I guess for his own sort of ego, he probably doesn't want Hyperliquid to win. So I imagine he's got somewhat of an interest in trying to boost the success of Aster. And I think, as we all know, the best fundamental is price action. And so if numbers going up, then the token, the project is like the fucking best thing under the sun. And I think he's very aware of that. And we're seeing that with BNB. We're seeing that with some of the BNB tokens. And yeah, Aster is just kind of like something new, sexy. So quite bullish on that. Even though right now I'm overarchingly bearish while still long because I'm retarded.
That is that's the only way to make money in crypto anyways. Yeah. How that's a very good point, by the way, on ENA. Do you have any view on what must have happened for their yield that is essentially farming the basis between spot and derivatives?
Yeah, that's a really interesting one,
because premiums would have been through the roof as all the volatility and but
I think at some point I think the basis they would have traded went negative, right? And so they would have lost money on their position actually.
Yep.
Especially
I think it was hard coded to 1 as well. On a lot of exchanges, so that's something that I'm watching, and I think that needs to be understood a bit more. But from what I understand is that they're still around, and exchanges are so the exchange balances are still sort of indicating that it is not a dead man walking. But yeah, absolutely, that would have been a definite loss-making trade. However, they reset after a period, so that sort of limits their exposure. The amount that can be exposed to at any given point in time. But again, this could just be sort of the first time that this is sort of it could be dead man walking, but I don't think so, because this would have been, and I think in general, anybody that loves this sort of volatility would have been quite disappointed with the amount of DPEGs on stablecoins, because it was actually not particularly interesting. The interesting bit was USDH actually, because it was essentially available at a premium, which would have seen USDH holders quite happy. But there's not too many of them, because I think there's only been 25 million minted. But that again speaks very much to Hyperliquid, which at that point, the protocol would have seen obviously a lot of fees being realized. So that would have been good for USDH holders as well, because they all get to participate in the Hyperliquid ecosystem. So I think that is good. Plus, I think that there's going to be, and we didn't even speak of this, but so a lot of this price discovery is an integral part, right? And this is ultimately this comes down to oracles. So this is, I think, an interesting opportunity for oracles as well. Simply because and what's really, really quite interesting as well as we're going through all of these charts, so we're looking at Solana, Hyperliquid right now, and this is obviously a division of two prices. But if you look at the Solana price on Binance versus, I think you had KuCoin on, versus OKX, you'll find that they're really, really quite similar, which with these wigs is, unlikely, I would say, that any sort of exchange would have had the same sort of price discovery curve on that front. But ultimately, it just shows that there's they just use each other as an oracle, or they all use Binance, whatever it may be. And that's again why things on chain will eventually be better, because they're more transparent, and that way at least it will be consistently transparent, and everybody understands exactly as to why they were liquidated, which at that point at least is fair.
I do think that the lesson from each massive bear move or volatility event is always that decentralized finance actually works better than centralized finance to a certain extent. So maybe coming at it from a very different perspective, but let's say in 2022, you had the whole Celsius, 3 Arrow, Voyager, BlockFi, Babel, and of course FTX and Genesis. And I'm like, everybody was kind of looking at Aave and Curve and, MakerDAO and be like, oh, actually, it works. And of course, the token, the ecosystem token price is down, but the solution itself still works. And I feel like over the weekend, same thing, right? So nobody had any complaint about Aave or Curve or Maker or anything else, that would offer some kind of on-chain solution, because it just works in a very kind of clear, transparent, automated way, right? And so, yeah, 100%.
Yep. No, and I think the only shocking thing again in this instance is, if obviously they facilitate loans as well, asset-backed loans, which at that point, I think I'm not even sure if, and there's rules around collateral, which is why nothing worse happened. But there's a difference, like in using Bitcoin as collateral as opposed to Doge. And I think this weekend, or even Doge versus Solana, I think this weekend really did sort of show the differences, or it sort of pointed out as to which assets weren't over leveraged. Let's put it that way. So, because even these sort of short-term movements could have, again, because it's rehypothecation. And so from that perspective, which is great. It gives you a lot of capital efficiency. So it's certainly financial innovation for as long as it's being used responsibly. And I think LTVs of, like 15, 20% are probably very doable, but anything that's higher is probably improbable.
Yeah, I see what you mean. That's cool. Interesting. Anyway, is there anything else we needed to talk about that we haven't talked about? I feel like we've kind of covered our degen trades and the mayhem of this weekend.
Bitcoin to 250.
Bitcoin 250? Yeah, that's still the target.
Nice. I hope so.
Maybe the one thing I would say is, maybe as an argument, satiric to the fact that, you were saying that the retail are just not in or might just not be interested. But couldn't you make the argument that all the ETFs, for example, and all the products and even the equity, the crypto equity and so on, that's being traded and bought in part by retail?
For sure. But I think as well it's then testament to how underwhelming retail effect is this cycle, because it's like, it seems like billions have flowed into DATs, which isn't necessarily retail, but that's barely moved the price. I guess most of it's just been OTC deals, ancient whales selling lockups. So that's just been billions of dollars not going into pumping tokens. You've seen a lot of movement with like, say, Bitcoin and ETH ETF buying. But again, the price hasn't really gone up that much. And I think it's also just in part, like, there's just some like real big holders who are up a lot and have finally decided to sell. So especially on Bitcoin, there's been a handful of like 14-year-old wallets waking up,
right? Yeah,
and just dumping billions of dollars. And I think psychologically 100K has been that sort of, I guess, like, maybe I should start selling now type thing. So I don't know. I just, like, why is the price not higher yet? It's like everything is ripping and Bitcoin can barely make it over 100K. And I say barely make over 100K. It's already up like 6x off the bottom. And so either what are people expecting? It's like, this is either already given huge returns, and if you were in it from the lows of 22 or whatever, you've already had a great run this cycle. Like, what more do you want? Or
I think we want
why are we not 250? Like, gold to 4,100.
But it's interesting how you said it, right? But the narrative is so price driven, whereas I feel like if tomorrow Bitcoin went to 130K, all those worries you have would be blown away and we'd be back on the bandwagon of a bull market. You know what I mean? Not saying it happened, but like when we broke the 120 to go to the 125, people were like, oh, it is making your all-time high, and should Ethereum catch up? And all the bullish narratives come back as like, oh, should we actually be allocated? Are we missing out, right? And I think that will eventually come if and when Bitcoin does that, right? So
Maybe just 30K first.
yeah. Well, or 60K, right? I think if it has, yeah, if it has to retrace, I think it will retrace the previous all-time high, maybe a bit lower, but not
like it did last time. No.
Well, dude, the last time was 15K relative to the 20K, which was the previous all-time high. So I'm like, it's
That's my
not.
point. Yeah.
Yeah, I mean, it is lower, but it's also not massively lower. So if you told me
25% lower.
the next retracement of Bitcoin is not going to be 69K, but we might drop down to 45K, I'm like, you know what? I'm okay with that. Basically, I want to enjoy it, but I'm okay with it. So yeah, no, okay, you're not okay with it.
I'd be very upset. I'd be very upset if I was still holding it dry. Like, I hope it does go back down so I can buy more. But I mean, if I was a holder from 125 down to 40, I'd be like, fucking hell, that's pretty depressing.
Well, I mean, it's been no different to if you would have been a buyer of the 20K high, right? In when was it, in 2018, or call it just under 20, right? With a few years later, you still would have been a very, very happy buyer, right? You are 6x, well, not anymore, but almost 6x, right? And I think that's how people need to think about Bitcoin. So forget about a week, a month. Think about it in years or decades rather. And I think we've all had that discussion. If you keep the Bitcoin you buy, that's ultimately the best trade. Just don't touch it. And
I still think it's going to 1 million.
Oh yeah, there's no doubt in my mind. Absolutely no doubt. And I really want to get that message across. This is a super emotional time. One thing that I did sort of peek at whilst we're chatting is also what bond buyers are pricing at, and what the option adjusted spread is on high yield and sort of bonds, and that still doesn't. We're still relatively low, and bond holders are typically super risk averse. So from that perspective, I've not seen traditional markets price in any outsized risk. Obviously, that takes time to sort of price in, and it's certainly not as sort of bullish as it was sort of mid-September-ish. But still, we're nowhere near levels where people would generally get concerned. So I'll just say, let's sit back, watch it pan out. Traditional markets have been on a tear as well, and I think, just zoom out. And I think that sort of arc, that's maybe to my point earlier, that's what I've been missing. So it almost looks like we've been in a channel for quite some time, which means that, okay, to be fair, this is a logarithmic chart, right? So that will sort of, that will look at it a bit, will make it look a bit differently. But I think this is the right way to look at it, right? So, and I still believe that we've got some room to run. And yes, there's marginal returns with each sort of cycle, but I would still sort of expect that, maybe not necessarily that in the next sort of 6 months, but look, like 2050, I'll give you 2 million. I think for Bitcoin, I think that's not unreasonable at all.
But I think this is also maybe the difference between this cycle and prior ones, where I saw someone else post something similar to this that I just recreated, but each of these sort of parabolic moves have mostly been sort of retail driven. So it's like kind of probably over exuberance from retail that has created these parabolic moves, whereas this cycle has felt a lot more institutionally driven. And so I think maybe that's why we're seeing this more sort of like controlled grind up within a channel. not to say the retail exuberance still can't come in, and we see some sort of blow off top. But maybe that's why we're sort of not quite seeing the exponential return that we were maybe hoping for. Yeah.
Also, maybe that's not a bad dynamic, right? I mean, I'm not talking about the ethos of crypto or philosophy, but I'm just saying if a new bull market is supposed to be more linear rather than exponential, because it's like really long-term, sophisticated, sticky capital, I'm not opposed to it, right? And so maybe it means that the end of this run will not be as exuberant as we wanted it to be, but fair enough. So something that I thought was interesting in all the on-chain indicators I look at is that the reserves on exchange is pretty much at an all-time low. And so that can be explained with either more on-chain activity, which agree has been the case, but also of just institutional players that are just directionally long and are buying it and then taking it into custody or DATs or ETFs or whatever you want, where there's just not that much capital being deposited in exchanges, right? So of course you always have the headlines that you mentioned, right, of like super old wallets that are just dumping billions in one go, and you're like, oh my god, how is it being absorbed? But on the flip side, I feel like there's probably a lot of people that are buying, and it's part of their mandate to just hold it for the next X amount of years, and they're not going to be budging, right? And maybe that's the linear trend we're seeing, where it's like maybe it will go down a bit with the speculation, maybe it won't go up as much with the speculation, but it's got that linear and that solidity to it. That's it.
And then what do we think is going to happen if and when gold sort of cools off?
Because
bullish
it does
for Bitcoin or bearish?
I think it's bullish. I think in previous cycles, if I remember, you had like an outperformance of gold that was then followed by a catch up by Bitcoin. So yeah.
I will say that this is central bank driven, right? So there's a lot of on the gold side, right? On silver, I'm not quite as convinced as to what's going on there. But yes, I think ultimately, that's right out short-term volatility. And look, we could be wrong, and this could be bad, but ultimately, this is the difference between like zooming in and zooming out. And even Bitcoin, if you looked at like the last, 48, 72 hours, be very, very different picture as opposed to looking at it over a multi-year horizon. But yeah, I still think that we'll see an emotional top that we always have, and I just refuse to believe there will be otherwise. But look, this is the beauty of this space. You never know what's happening, which keeps things exciting. And I think that's not a bad way to look at it either.
I love it. Guys, on that note, I have a hard stop at past, so we have to close here.
Always a pleasure.
But I think it was a good call. It was also an interesting time to be speaking, 2 days after such a massive event. I'm happy we're all three seemingly at least, holding up, even though maybe suffered some losses, but still in the game and managing that well. That's it. Talk again in 2 weeks.
Absolute pleasure. Guys.
See you later.
Bye, guys. Okay, so I think we missed. Okay, the stream was up to a certain amount or up to a certain point. I know, it's all good. It's done. And okay.